Welcome to Markets Now. I'm Michelle Rourke with Brad Kooima, Varilek. Grains all in negative territory this morning. Over in the livestock futures, hogs have been to the plus side. Cattle have been back and forth, but right now we're trying to push higher here. And Brad, I guess let's talk a little bit, first of all, about the break that we saw in the futures last week and the break that we saw in the cash trade. Most of this is seasonal, isn't it?
Well, thanks for having me on. First of all, Michelle, thank you. To have a sell-off around fair time, that's how old I am. Remember those seasonals? The back half of July to see the beef market weaken, but certainly wouldn't be the first time. In fact, it'd be unusual if it didn't. The only significant year that it didn't, there's the year or two now after COVID, where we kind of kept that summer demand, mostly because of retail type, not hotel restaurant type purchases. So it'll be interesting to see if we ride that same wave of demand. But back to your question, yeah, and to have the cattle market break a little bit this time of year would also be common, and usually that's because of increased supply. Now, I would say that I might take exception to somebody's telling me that there's an increase in supply, because there certainly isn't in the north. But if we can rewind a little bit, part of last week was also a little bit off the radar, because we had what I thought was a algorithm triggered trade that reacted coincidentally, simultaneously to when the beef was announced $4.86 lower that one day, and they just trashed it. It reminded me of 2015, and then the market had to absorb or react to a little bit some rumors about a regional packer, which at this point are unsubstantiated, and they're killing cattle. But the rumor was that they were considering closing. So we had a little bit of extra outside type news along with what might seasonally been expected anyway.
Yeah, and then wasn't Dakota City down, or Tyson down maybe Monday for that gas leak you and I talked about? So that just kind of capitulates all these rumors, doesn't it?
Boy, yeah. How come these hog plants never have any problems, right? I mean, yeah, that was also part of the deal. A gas leak that they lost a day, and then they were going to make it up Saturday. Then they decided not to. So, when you're trading cattle, it's like sitting in the front row at SeaWorld, right? You might get splashed on. It's hard to imagine what can happen next.
No doubt. So cash trade last week, we should kind of differentiate the fact that the north, you had some 198 there. The south is where we actually saw the softness, right? Why the disparity?
$10. Basically 188 was the best they did. 198 here, we traded cattle to 2 or 3 different packers in Nebraska and in Iowa. And one of those packers very, very short bought with cattle, going within a day or two of when they were sold. Well, why the disparity? You might say, is it grade? Because the cattle do grade better here in the north. That's a small slice of it, I think, because the choice select spread actually isn't that wide seasonally, like it normally would be. Is it supply? I really don't buy into that notion either. But what I do think is the last data I saw Friday was that Texas had managed to negotiate, all grid, by the way, 673 cattle for the week. 673 cattle for the week. Good for them. And somebody's going to tell me that it doesn't make a difference whether you negotiate or not, that's not going to change the price you get. I'm sorry. I don't care how many PhDs you got, you're not going to make me believe that. So I still think it's because the way over half the cattle up in my neck of the woods are negotiated for. And we've got a little leverage, and that's when it shows. So that's what I think the big difference is. You can argue with me if you'd like. That's fine.
No, I'm not going to argue with you on that, because I've kind of seen the proof in the pudding there as well. But cash trade this week, what's your call? Do you think we're going to be softer again this week?
I'm dumb enough to put myself out there with you usually. So, I guess the easy answer would be, let's hope for steady. Okay, I'll hope for steady, but I really honestly don't think we're going to get it. I think we'll be a little lower again. Last week we were 1 to 2 lower. To be another 1 to 2 lower wouldn't shock me. You're going to probably hear some pressure on the box beef market. But having said all that, look at where futures are. We're at 182. Yeah, it's not an easy market to trade this steeply discounted. Even if you break cash a little. Go ahead. I'm sorry.
I said that is a huge discount, isn't it?
extraordinary. Goes back to yesterday or last week, Friday. I had a little discussion with a couple other market people talking again about, does the CME recognize that we seem to have a bigger disconnect than ever? Is this contract functioning as it ought to? Not unusual to be a discount, but to be this severely discounted is off the charts. And by the way, the feeder cav are setting records too in terms of the disparity between futures and the index. So I don't know. I think some of these folks are going to have to take a hard line at whether we've got to do some tweaking of the contract specs. And I would like to see us tweak some of those back to the favor of the long speculator instead of changing the rules for the benefit of the short. But of course, that's me. I believe that you need to have the long speculator to balance the market.
Yeah, absolutely. I know the CME has been pushing that for sure. What about the hog market? New contract lows last week. We're trying to recover this morning. It just seems like these recoveries are one-day pops, and then the funds come back in here to sell again. Do you think we've got enough of those people out of the market now that we can try to stabilize, or does cash have to kind of show this leadership first?
Well, hogs are an enigma. Just when you think maybe you have something going, they let you down. They should have hog traders at the funeral so they can let you down once more, right? The pallbearers. We had a reversal up though last week. We got a chart.
They're disappointing.
Yeah. Okay. So we got a reversal up. We had follow through. A big volume. You got some of the qualifiers that make I'm talking about August hogs where the volume is. That make it worthwhile. I thought that there was a fairly big drop, puke, liquidation. Unfortunately, sometimes that happens at the end of a move. So, I'm going to stick my neck out and say, obviously, we need to close probably above 91 cents to say, okay, for sure. But I think that we just missed a weekly reversal by a whisker here Friday as well. I'm more inclined to think that we go into a little tighter numbers. It was 100 degrees over the weekend. That used to be bullish too. So I'm going to go with the idea the lows are in and we try to crawl back to someplace between 95 and 96 basis the August hogs.
Yeah, and you got to believe the crush margins here have gotten better with lower soybean meal and corn, but it doesn't seem like the hogs are reflecting that much. So
no, they certainly have not. But it's all signs fail in the case of the hog market usually. So
yeah, no doubt. What about the grain market? Okay, obviously we're going to have some rain in the Eastern Corn Belt again. The market's been trading rain makes grain, and the funds, they're pushing short and putting their foot on the accelerator. So how low are we going to go?
I used to have when I first started 100 years ago, I used to have a thing taped to my phone that said there's a paddle big enough to fit everybody's rear end, and so, everybody's wondering where's that paddle for the guys that are, especially this corn fund position. My goodness, funds are heavily short all across the whole deal over there. And unfortunately, to try to outguess when they're going to come out doesn't work. You might, don't fight them. That's a problem. Now, fundamentally, I'm not as bearish corn as what some of these people are. I thought the report last week was friendly, and it is.
Good demand.
Absolutely.
Super demand.
So that and what the basis is doing around here also makes me think that what the perception of old crop supply is not as big as what they thought. Otherwise, the basis wouldn't be this strong. Now the camps were really bearish, the bean thing, and I get that. We got to get assailed on all fronts. Demand's not a runaway. We got South American competition. They seem to grow more every year, and it looks like it's going to rain every other day. So I don't know. It's a tough call here. As an end user for corn, I'm more inclined to look at the long side of the corn. Bean deal, it's been possible for me to sell into as steeply oversold as this thing is, but I would sell bounces here if we get them, and we will. We always do. So I wish I could come up with something a little more positive on the bean deal, but I'm afraid that the momentum is the other way.
Yeah, no doubt. All right, thanks, Brad Kooima with Kooima Varilek. That is Markets Now.